Welcome to A View from the Floor here at the New York Stock Exchange. I am joined by CEO of Bryn Mawr Trust Advisors, Jamie Hopkins. It's so good to see you. The S&P 500 hitting all-time highs, over 7,000 for the first time ever. What is the pulse of investors right now, Jamie?
So I think investors are still, I say, cautiously optimistic. Earnings have been really strong overall for the past year, so I think you see a little bit of that pulling through in the market, that companies are still doing well. There's a lot of capital out there in the private equity and investor pockets. So that's encouraging. I think globally, right, there's concerns out there, and that's what's causing a lot of the volatility that we're seeing.
Bank earnings are coming strong, but as you mentioned, the tone overall seems to still be a bit cautious. What is the economy going to look like, you think, and what is the outlook?
So one of the interesting things about bank earnings right now is rates have not been cut yet. So banks do benefit from that if they're a rate-sensitive bank. And so that's been positive, but the outlook is still very uncertain. Where are rates going? Are we going to see cuts this year? Inflation coming in higher than expected this last month. And I think a lot of people, especially if you're talking to consumers, aren't really expecting or feeling like inflation is coming down right now. If you're driving around, you're not saying, hey, everything feels cheaper or getting less expensive. So oil prices, obviously very volatile. That's going to have, I think, a couple month impact on inflation. I don't expect to see good numbers the next couple months, but we'll wait and see what actually comes out. But higher inflation will, I think, bring a little bit more volatility for the rest of the year into the market. Again, that's always just looking out. Typically, midterm election years have a lot of volatility. We often see large drawdowns in those years. A year out from that major drawdown in a midterm election year, though, markets tend to be pretty far up from that point. So there are some encouraging things, even if we see another pullback this year.
There's still plenty of geopolitical risk out there, volatility always coming into play when that happens. Talk to me a little bit about that. Walk us through an investor's mind.
Well, the geopolitical risk that is out there right now is that sense that it changes by the hour, by the minute, by the day. And so when we have new breaking news about what's happening with oil, the different wars going out there, that can send the markets moving in a much different direction almost instantaneously. And I think that is on everybody's minds. Nobody feels really certain about how the next couple months are going to unfold. So while we had great kind of run back up in the markets here the past week, that could shift very quickly, and investors could start moving to other assets out of concern. I think one of the challenges, though, out there today is getting back to that first point. Earnings over the last year from the S&P has been really strong, and we've mostly seen the run up in the performance of the market almost tied directly to the earnings growth versus a multiple expansion. So that is a sign of a healthy investor kind of economy. Instead of saying multiples are expanding but earnings are staying flat, we are seeing earnings growth and investor growth.
Looking ahead, how are the midterms this year going to affect the investment landscape?
Yeah, I mean, midterms create uncertainty. We don't know what's going to happen. We don't know if there's going to be a political change in the U.S., right? Maybe in the House, maybe in the Senate. So those things start bringing up concerns over the next really 3 years. But we likely will see another kind of concern period from investors when more data starts coming out about what are these races starting to look like? Because in some cases, we don't even really know who is going to really be in the race yet. Some people will still drop out. And we saw some of that this last couple of weeks where maybe leading candidates are now out of the race. That's going to change the landscape. But again, usually the drawdown in midterm election years occurs a little bit later in the year than right now. I think what we just saw was almost entirely related to the global concerns. But the midterm concerns, I think, are going to come back into fold because people aren't talking about it right now because we do have wars and conflicts going on. That's the focus. As we go back to this internal U.S. Kind of political landscape, I do think that's going to create more uncertainty later this year.
So with everything that's going on, a roller coaster of a ride, it seems to be optimism, volatility, geopolitical issues. How are investors looking at opportunities right now?
Well, the private credit world also scared some investors. So I think some people have actually said, I'm fine going back into the market and away from some of the privates where we saw a huge run up over the last couple of years. That's at least what we hear from some investors when we're working with clients. They're saying, maybe I don't want to go as heavy into that. There is some noise out there. It's getting its first real liquidity challenge right now. And so maybe I do want to, bet a little bit on the American consumer who's still spending and the growth in earnings that we've seen for the last 2 years. And so that's a good bet for some people. They look at it and say, I at least get quarterly information about that. I know what's happening there, and it feels positive. I think we also have this tax refund that's coming out for the next 60 days, should be spent. Americans are not great at saving their tax refunds. So when you look at that, it's kind of a two-sided coin. I wish more people saved it and invested it, but they also spend a lot of it. So with expected higher tax refunds, I do see more consumer spending over the next 2 months, which should help second quarter earnings for some companies. And that'll be positive for investors too.
Well, thank you so much for joining us here on Asset TV.
Thanks for having me on.
Of course. And that'll do it for us here at the New York Stock Exchange. I'm Michelle Yu, and we'll see you next time.